DJ here from PTA. Want to go over a trade, Dpsi. This was on everybody's radar today. I didn't even trade this morning simply because I'm on place hunting, basically. I'm actually moving state to state. So I've been trying to get everything situated with that. So it's been taking me off the desk. But when you're a trader, you're always looking at charts. You're always looking at what's going on. So just so that you can see, setups for the next couple of days or whatever the case may be. Fortunate for our PTA members that are subscribed to our mailers, a lot of them receive this early morning on Dpsi as a potential mover. And it was shouted out in our Discord, so on and so forth. So guys, when you go in there, click on the Discord link, join the Discord. It's totally free. Get you some information about how to do these trades and how to be profitable. This particular trade is how people blow up their accounts. The reason I say that is when you don't have a set of rules, you can blow up your account. Now, and that's what I'm saying from amateur traders or newbies or whatnot. One of the things I learned from when I first started trading was I don't trade the first 5 minutes. And I created that rule humbly just because of losing $4,000 in the trade. I want to say the ticker was SPI. Major volume coming off of the first part of the morning. Had a knee-jerk move going up, and then it just collapsed. And I didn't know to wait for it to manifest. I didn't know the different things that I know now when it comes to trading. So it was an expensive lesson of $4,000, but it also made me start thinking about how I wanted to get better and not lose that type of money trading stocks. A lot of people don't create systems. So for instance, much of our traders that trade on the floor, we don't trade smaller price stocks. We don't really trade penny stocks or stocks that are under, $3 or different things of that sort. Every once in a while, you might see a interesting play. I'll go over those, but I'm more so going over those to show you patterns, not something that I would normally trade or even that we trade the family fund. So for those who don't know, PTA is a family-oriented business. The traders on this desk trade a particular family, is a group of two families that have put their money together, and us traders here and analysts is what we trade with. So our particular strategy has to be something that is obtainable. It has to be viable. It can't be something that's just radical. So we have to be very precise in the trades that we take, because we are discretionary traders. We don't use any algorithms or anything like that. So our proprietary system that we use when we trade is what helps us keep trading in the right motion. So, with the multiple traders that we have on the desk, they all have a certain amount of capital from the big pot. We have bigger plays, things that we put in for 3-6 months. And then daily traders like myself who trade on the desk, when we find particular plays, we're always able to allocate capital to other traders that are trading for that day. So it's always a growth moment for us here at PTA. But the particular trade that I lost $4,000 was one of those trades we call the steam trade, the steam factor. In particular, this is the time where you really start to evaluate if trading is something you really want to do. And everyone has a burn number. Everyone has a steam number. The number that they lose that amount of money in one trade, or done. One of my biggest losses was $4,000 in one trade. I know guys that lost $900 and quit. I know guys that lost $20,000 and quit. So it really just depends. So when I see other traders out there and they lose, $60,000 in a trade, or they lose this, I know that's really all relative to their account. And I also understand that they probably have a very high steam number at this point, because ultimately they've made a lot of money. So the sting number changes, it evolves as you become better as a trader, as well as when you start to implement your risk, you start to reduce your drawdowns and different things like that. Your sting number changes and evolves with you as a trader as well. But one of the things I always tell new traders is to be safe. The safe way is just let the market kind of come. Some traders won't trade the first 15 minutes, which is a great idea if you want to let the market settle. I have reduced mine to 5. I don't trade usually the first 5 minutes. I like to see what's going on, get a feel of what's going on with the market. But even looking at my statistics, most of the trades I take are after 15 minutes, interesting enough. So that's not something by plan, but that's just by watching the price action. So in this particular trade on Dpsi, that 5-minute rule really played a part. So breaking it down, let's go down to a hour. As you can see, when you look at this trade, you can tell that this might be something special. So we had a nice ramp up, pull down. So we had a couple rejections. So as a result, this is what getting people enticed. This is what getting people thinking, oh yeah, this thing might go. I want to break it down a little bit further. Let's go down to a 5. First 5 minutes, we had a hawk, 10-minute hawk. Then we had another hawk. So when it comes down to that, you definitely don't want to jump in a trade when it's halting. So you had 1, 2, and then the hawk, 10-minute hawk. Then you had 1 5-minute hawk. Then you had 10-minute hawk. So you had a hawk going up, hawk going down. This is how people chop up their accounts. Because just from the high to the low, you jumped in at right at the high. You're talking about a $2.26 swing. For most people, they can't stomach that. 10,000 shares, that's $22,000 you would have been down. Could you stomach that? What was your risk? Because if you were risking here, you didn't get out because it halted on the way down. Now, could you have risked it here? Yeah. But would you have risked $26,000 on this? Jumping in when everybody else jumped in? Probably not. And this is what I teach traders that I do my one-on-ones with, is to let the trade manifest. When I see a trade that's constantly halting over and over like that, it means that trade is indecisive at this time. They haven't really figured it out. So let it manifest. Let it fold. Let it come together. Don't just jump in because it's going up. So after we got this pullback and then we got this jump, that enticed a lot of shorts. Look at the bars. Look at the volume and how everything kind of sped up when it's left from here to here. Kind of sped up here. People got really involved right here. But they rejected. So you're still looking at this as a low. This is a major rejection. And then it kind of bottomed out on going down. The volume ceased. So when people say, well, how do you incorporate volume and price? Very simple. Look at the volume, look at the direction we're going. We're going down. We have massive volume here after igniting candle. And then all of a sudden it just dried up. That was a clear sign that the stock was going the opposite direction. Because ultimately you would have wanted this to drop here. After all this, you would think it would drop. Well, it began to pull up, and this is where the bounce. So the pattern, people say, well, what was the pattern? Well, they dropped the pattern right off of the open and drive. So this right here got everybody confused. Then they dropped a pattern like this. They did A, B, and then they curved it for the C to get in. So what was your risk? Well, you could have took it off the low. 50 cent maybe. I probably would have got in on a 31-cent move just looking at it. It was still making higher lows and squeezing. Shorts trying to take it up. Because see, I already know what they're thinking. And see, once you start trading effectively, you have to think on both sides. So when you get into a trade, you got to have a vision of what could happen both sides. After this massive ramp down, I would have thought, hey, got us a little bit of a consolidation and then maybe a bounce and then a fall. Maybe. But when I took a look at the stock and I said, oh no, it's rejecting. It's rejecting. It's rejecting. So when they tried that last attempt here and it continue on, you can get in here on the second continuation. I would have got in right there because it just already rejected 1, 2, 3 times on a curve. So when I saw that, I just said, hey, this is where everybody got in at. This is where you should be getting in at. Boom. Took off. Got a little slight pullback. Boom. Took off. This right here had everybody wigged out. Why? Well, look at the price action. They stepped in heavy. So if we go back, look to the left, key area. This is where they drew it down from. So the charts, you can always look back to see where it could possibly go or where it's trying to go. This was a massive move on this day. Massive. Lot of range. For 133,000 shares to be traded in one day, still did a $6 move. And they ramped it down. And then they gapped it up. So majority of these people here underwater. So ultimately, when it comes down to, yeah, I want to play this trade, I want to do this trade, you have to let it play. You have to let it manifest. That's how you get into winning trades. You join the trend. So we had a nice massive move to the upside. I mean, literally, before we get a nice taper off. $5.23, good $5 move. You know, 30-cent risk, $5 gain. Take that all day. I would take that all day. So the key to it all is to find those areas and making sure you join in the right side of the trend. Now, how do you do that? Again, look at the chart. Just pay attention to the chart. Had a massive move down. Then you had a quick little move up. And it ripped. Why? You had so many people that got in here. It got in heavy. And then it just reversed on them. Ripped them to shreds. But it popped right into a key area. So you had this massive swing up, massive swing low. Look at that. Another 10-minute halt. And then they ripped it back up. So, and then you can see the sideways price action. So when you're playing a trade, you have to pay attention to all the time frames so you can get an idea of which way the stock is going to go. And then pull it down. So, guys, when you're playing these trades, when you're playing these stocks, you have to pay attention to the price action. You got to pay attention to what's going on. Think like the opposite trader. If you're a long, think like a long. But remember what the shorts are thinking. If you're a shorter, you got to think about what the longs are doing and what they see. So the key to understanding good trades or good positions is understanding both sides of the equation, like a competition of some sort. You got to know what your competitor is looking at as well and what they're thinking. Now, the one thing about shorts is that when they're stubborn, it pays very massively on the long side. But stocks naturally want to go down. So that's why the shorts pay very handsomely when it goes down. So the key to it all is whenever side you're on, have a strategy or play for the opposite side, because then you can understand what they're doing. So when you start to see the behavior of a short while you're in a long position, you then can say, okay, let me get out of this. Let me cut my losses. Hit my stop loss. Hit my key area. Wherever it's doing, you can then take that trade confidently because you already know what the other side is doing. That's what keeps you safe in these trades. All right, guys, if you have any questions, concerns, hit the like button, hit the subscribe button. Leave them in the comments, the questions. Be sure to reach back out to you. And guys, join the Discord because there's great information in there. I'm actually in there typically up until about 10:30, 11 o'clock at night. So if you ever have questions or concerns, you want to ask questions, you want to go over something, I'm definitely around to help. I love talking about this stuff. So guys, as I tell every new trader and even veteran traders, stay studying and stay focused.